Hello students, today in this video we will discuss bank reconciliation statement. Bank reconciliation statement. As you know, every businessman has account in bank. So every businessman prepare cash book. No doubt with cash and bank column. But we will discuss here only bank column. Two sides of cash book are there. Number one, debit side, that is also known as receipt side. And the second one is payment side, credit side. So we prepare cash book and we prepare bank column in cash book. That means we have opened a bank account. When we deposit some amount or check in our bank account, we record in the debit side of cash book. That means we increase our cash book balance. And when we pay by check some amount, then we record on the credit side of cash book. At the end of the month, we total both the sides. Suppose the total of receipt side is 100 and the total of payment side is 60. At the end of the month, we calculate balance 100 minus 60, 40. 100 minus 60, 40. That means our bank balance is 40 according to our cash book. On the other hand, bank also prepare our account named as passbook. Two sides are there as usual, debit side, credit side. In passbook, credit side is receipt side and debit side is payment side. Debit side is payment side. When we deposit some check or cash in our bank account, we record in the debit side of cash book. On the other hand, bank record in the credit side of our account. The same items which we are recording in the debit side, bank is recording in our account on the credit side. And the items which we are recording in the credit side, payment side, same items bank record in the debit side. At the end of the month, both sides are totaled. And suppose the balance is 30. Look at this. When we are recording the items in the debit side, same items we are recording here on the credit side. And the items which we are recording in payment side, bank is also recording in the payment side. So balance should be same at the end of the month. But always this will be differ. Always balance of cash book does not meet the balance of passbook. It will remain every time different. Why? What are the reasons? What are the reasons? So first of all, we have to learn why the cash book balance is different from the passbook balance. We have to find the differences. We have to find the reason of differences. Then we have to prepare at the end of the month a statement which will reconcile the cash book balance with passbook balance. This statement is called bank reconciliation statement. So what is bank reconciliation statement? A statement which is prepared to reconcile the cash book balance and passbook balance is known as bank reconciliation statement. Now let us understand what are the different reasons for the difference in cash book and passbook balance. Number one, checks issued to the creditors but not presented into bank till the end of the month. Suppose we have made some payment to our creditor. We record in the credit side of cash book. That means we decrease our cash book balance. But the same persons, creditors, they did not presented the checks into the bank. So passbook balance is same. Passbook balance is same. So there will be a difference between the cash book and passbook balance. Second point, checks deposited into bank but not credited by the bank till the end of the month. Suppose we have deposited some checks. We record in the debit side. That means we increase our cash book, but the bank has not credited in our account. So passbook will remain same. So there will be difference between cash book and passbook. Third point, checks deposited into bank, or you can say checks sent to bank for collection but dishonored by the bank. Dishonored by the bank. When we deposit check in our bank account, we increase our cash book. So cash book balance is increased, but on the other hand, passbook balance is same because bank has not credited in our account. That's why passbook balance will remain same. So there will be difference between the cash book and passbook balance. Next, sometimes a customer deposit some amount directly in our bank account. Suppose customer has directly deposited in our bank account, but not entry is passed in cash book. So customer has directly deposited in our bank. That means bank balance is increased. The balance of passbook will go high, but the cash book balance will remain same because we have not entered any transaction. So cash book is down. So there will be a difference between the cash book and passbook balance. Next, sometimes bank allow us interest. When bank allow us interest, bank credits some amount in our account. So our bank balance will increase. So passbook balance will increase, but the cash book balance will remain same because we have not entered this transaction into cash book. So there will be a difference between passbook and cash book. Sometimes bank charges some expenses from us, or bank charges interest on overdraft. When bank charges interest on overdraft or expenses from our account, then bank take some amount from our account. So bank balance will decrease, passbook balance will decrease. On the other hand, no entry is passed in the cash book. So cash book balance will remain same. So there will be difference between the cash book and passbook. Next point. Suppose bank has paid some amount directly as per our instructions. So when bank pays some amount on our behalf, bank debit in our account. Debit means bank withdraw amount from our account. So passbook balance will decrease. But on the other hand, we have not entered this transaction in our cash book. So cash book balance will remain same. So there will be a difference between the cash book and passbook. There may be some more reason of differences. For example, the total of receipt side or total of payment side may be wrong, may be overcast or undercast, or maybe there is any wrong entry given by the bank, maybe wrong entry, wrong credit given by the bank or wrong debit given by the bank. Suppose bank has wrong credit in our account, our bank balance will increase but the cash book balance is same. When bank wrongly debited in our account, that means bank withdraws some amount wrongly, our passbook is reduced but the cash book balance is same, so there will be difference between the cash book and passbook. So these are the some differences, these are the some reasons for the differences in cash book balance and passbook balance. Now we have to learn how to prepare bank reconciliation statement. Bank reconciliation statement is prepared at the end of every month. At the end of every month. So what is the format for doing this type of question? Just write here bank reconciliation statement. As on 31st March 2020. Suppose we are preparing bank reconciliation for the month of 31st March. For the month of March. Right here, particulars. Plus items. Minus items. In this chapter, only two type of questions are there. When cash book balance is given, the answer will be passbook balance. And if the passbook balance is given, the answer will be cash book balance. So first of all, if cash book balance is given, we have to start from here. Suppose debit balance of cash book is given. Debit balance of cash book. We will write here in plus side. If overdraft balance of cash book is given, credit balance or overdraft balance, we will write here the balance. Right? Now let us take one example. Check issued but not presented into bank for payment. When we issue some check to creditors, we reduce our cash book. So cash book is down and passbook is same, right? So now we have to rectify our cash book. We have to change our cash book because the cash book balance is given. So we have to increase the cash book. So first item, check issued, checks issued but not presented for payment. It will be added back. Second point, checks deposited into bank suppose but not credited by the bank. So when we deposit some check, we increase our cash book and bank has not credited in our account, passbook is down, so we will have to reduce our cash book to balance the same. So checks deposited into bank but not credited by bank, but not credited by bank. This will be written here in minus items. In the same way, we will record all the transactions, we will record all the reasons of difference, and the final answer will be balance as per cash book. If plus items are more than the minus item, that means plus balance as per passbook, and plus balance means credit balance as per passbook. The answer will be credit balance as per passbook. But if the minus items total are more than the plus item total, that means minus balance as per passbook. Minus balance means debit balance as per passbook. So this is the point how to prepare bank reconciliation statements.